we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
There, that we were looking at the broad adoption of such artificial intelligence and deep learning models may over time increase uniformity, interconnectedness, and regulatory gaps. Secondly, let me just mention something about crypto assets. I know you're taking up a package there as well, I believe called MICA. This $2+ trillion asset class is truly global. It has no borders, no boundaries, operating 24 hours a day, 7 days a week. I believe it's an innovation that has and could continue to be a catalyst for change in the fields of finance and money. But while I'm technology neutral, I'm anything but public policy neutral. As new technologies come along, we need to be sure they're achieving core public policy goals. And further, for those crypto, I'm neutral, but if you want to encourage that innovation, I'd like to note that financial innovations throughout history don't thrive outside the public policy framework. They just don't last that long unless we bring them inside. What does that mean? Protecting investors and consumers, guarding against illicit activity, and ensuring financial stability. That which your committee is debating all month long and all year long usually. So there's much I'll leave to your questions, but there's two areas in crypto I want to mention. First, we're focused very much on the platforms, whether it's a trading platform or a lending platform. The bulk of the market activity takes place on these platforms, whether they're centralized or so-called decentralized. But unlike traditional finance like the Frankfurt Stock Exchange and the like, crypto platforms provide direct access for the millions of investors. You see, there's not a broker in between the public and the platform. That's an innovation in itself. But therefore, absent that broker in the middle, it's really the platform's the best place to put investment protection obligations, guarding against illicit activity obligations, and the like. Also, the public's left vulnerable without those protections. Unfortunately, we've seen a lot of fraud, scams, and abuse in the field. The second thing I want to mention is something called stablecoins. Now, you've all heard about Facebook's effort to stand up something called Diem or earlier Libra, but there already exists about $116 billion of stablecoins. Now, who are they and what are they? They're embedded in these trading and lending platforms and have been for 7 or 8 years. And these stable coins make up about 3/4 of the trading on all crypto trading platforms. So it's Bitcoin versus a stable coin rather than Bitcoin versus euro or dollar or yen traditionally. So they're embedded, and you might say, well, why did that happen over the last 7 years? I believe in part this was to facilitate those who wanted to seek and sidestep a host of public policy goals. We have layered over the last 40 years public policy goals over our digital public monies, over digital euro, over digital dollars. That's called bank account dollars and euro. We layered anti-money laundering, sanctions, tax compliance. The last thing I want to mention is issuer disclosure. I think it's a new bargains, and what's going on with the Chinese related issuers is that they have not fully lived up to an important law that was put in place under. It was called Sarbanes-Oxley. It was put in place about 20 years ago under President George W. Bush's administration. And that basic bargain then was that companies would be audited, but the auditors, the accountants, would be subject to inspections of a new agency called the Public Company Accounting Oversight Board, PCAOB, which we oversee at the SEC. And since that time, about 50 jurisdictions around the globe, including a number in Europe, we've sorted through how a U.S. agency could inspect the auditors, even in light of privacy laws, data protection laws around the globe. But there's two jurisdictions we've not yet been able to do that, and it's China and Hong Kong. And our U.S. Congress got back involved last year, passed a law which was bipartisan. It was 100 senators actually supported it unanimously to say if we're not able to do that within the next 3 years, 2021, 22, 23, if we're not able to do that in the next 3 years, then early in 2024 that these about 250 China-related companies would be suspended from trading in the U.S. The second piece was a basic bargain from the 1930s about issuer disclosure. And you see, in China, a lot of companies are not allowed to seek foreign ownership. In the internet's area, in education, in various mining, there's certain areas that cannot have foreign ownership. A workaround, a circumvention was put together over the years by accountants and lawyers where they would sell shares in a shell company, usually in the Cayman Islands. You might not know the Caymans, but it's a beautiful island. It is, off of below Florida, but in the Cayman Islands, and they would have service arrangements with the operating company in China in structures called variable interest entities. That structure itself, I've asked our staff, working with Chinese-related issuers, to enhance this disclosure, what monies are actually flowing between the Chinese operating companies and the U.S. companies. I think that type of disclosure, it basically allows full and fair disclosure. So that's the short-term but really important project over the next handful of months. And then there's this longer-term challenge because the Chinese officials have not allowed their auditors to be inspected. But that's worked really well in Europe. We're in good working collaboration there. It's an issue really just for these issuers. On your first question about crypto, I think that there is great authority that our sibling agency, the Commodity Futures Trading Commission, and the SEC, we have two market regulators in the U.S. We have significant authorities that are clear, but we also have some gaps. And I think bringing the platforms, if I were in your role and everything, I would say, all right, how do we get the trading platforms and lending platforms? It may work in MICA under the crypto or digital asset service providers, but how do you ensure that they're really inside the regulatory perimeter for guarding against illicit activity and, yes, investor protection? Bringing them clearly in, while at the same time not in some way undercutting your current robust regulatory regimes under ESMA and the securities laws. And that's we can attempt to do that and work to do that with our sibling agency, the CFTC, under our current authorities. But I do think with our legislative body, with Congress's help, we can address this, because again, our laws were written in an earlier bricks and mortar time, and while we have clear authorities, working with Congress, I think we can fill in some gaps. She would agree with what I just said. I share the spirit of what you're saying. I think that many of these tokens, crypto tokens, have projects behind them, have entrepreneurs behind them, and the investing public is looking and hoping for a profit based upon the efforts of that entrepreneurial group, the sponsors and the like. And under our U.S. laws, reviewed by our Supreme Court, that often makes those what's called investment contracts, and under our laws, a security, because that's how Congress wrote our securities laws in the 1930s. And the protections around our securities laws is about investor disclosure, protecting against fraud, protecting the sales practices, and if something's on an exchange, the exchange has to be registered, and that too has a bunch of protections. So I share your view that that's important. And this $2 trillion asset class right now does not have that protection. It frankly doesn't have it in Asia, North America, or Europe. I know that you're dealing and debating laws right now, but I think the platforms being brought inside of some investor protection perimeter is really important. And this debate that might be going on as to, well, should it be outside because it's quote unquote a utility token, I think with all respect, is usually promoted by the entrepreneurs who say, I'd rather be outside the investor protection perimeter. But these tokens are not like a laundromat token. These tokens are simply not that, and they're not really like a ticket to the opera house in Vienna or in Paris. They're not that type of token. They are highly speculative investment tokens where people are trying to save or speculate for their future, and that's why I think it is appropriate to bring them inside the investor protection perimeter. We have a lot of authorities in the U.S. already to suggest they are within that perimeter, either by the Commodity Futures Trading Commission or our commission. But again, I think you're right that if it stays outside, there's going to be, the public's going to be hurt. It's already happened, but it will happen more.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Gary Gensler at the European Parliament. And every time Gary Gensler speaks, we see that he is a New World Order puppet. He is the perfect chess piece. We know the banks run the SEC. There is no proper regulation for the regular investor, but we see plenty of protections for the institutional investor. Gary Gensler is kicking this regulation down the road. Congress is kicking this regulation down the road because, guys, we know ISO 2022 is for global regulation. Crypto is global for the New World Order's agenda. We know they want total control. And how do you get that? By taking over everyone's economy. With the C word, they've destroyed small businesses, also countries' whole economy. Now it's time for the rise of the fourth industrial revolution. And we see China has the blueprint. And remember, guys, in order for China to rise, there has to be an event to take down America to Babylon, and for China to rise but still look in great light. So all the other countries will follow. Because remember, when it comes to the New World Order, it's all planned out. Y'all have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.